Okay. Okay. Are we on, Anoop? Yeah. All right. Brilliant. So yeah, today just a bit of an overview, really. I've obviously been working with Vivek for a while now, and he's kind of explained to me a little bit about, the aim of Serene and a little bit about your situation and the need for this type of family protection insurance. And that's what the presentation is going to be about today, is literally about family protection insurance. A lot of you might have not seen that term before. It might be something where you're thinking, what's family protection insurance? And it is really a catch-all for multiple plans which you might need in your working life, in your family life. And that's just going to be a quick session today to kind of explain who we are and kind of service that we can offer to you and your family, really. I wanted to start the presentation with a quick introduction into the company I work with, which is LifeSearch. I think it's important to give you a little bit of rationale into who we are and what we are about, because I think a lot of companies do life insurance advice and income protection advice, and I suspect the majority of you on this call have already got a policy in place, which is absolutely fine. But it is a really unique company. I think that's why Vivek has reached out to us, because I do feel that our values and our culture are really aligned with Serene, and it's not just about selling you a policy or getting you the cheapest policy or the most cover we can do. It all those myths and kind of stereotypes around buying insurance are kind of shot by us, really, because we have redesigned how people consume this type of cover, and I think it's important that you kind of understand who we are. We've also been around a long time, since 1998, so we've got a long history of doing it. It's not just me obviously blowing my own trumpet saying that we are the best. We are. We've won awards, as you can see there. 13 out of the last 15 years we've been awarded best protection advisor, which is in relation to the brokerage I work under. So it's not just me saying that, it is proven. We've arranged over 1 million policies, and this is really nice. So we're recommended by Martin Lewis. I thought it's worth mentioning that because he's in the news a lot, and a lot of people are fans of Martin Lewis. I know he's got a nice following on social media, and it was an organic referral by him. He mentioned us on this morning, just out of the blue. It was no commercial agreement or anything like that. He just mentioned us, and it kind of took off from there years ago. And like I said, that just shows, because I know he really, if he's mentioning us, then obviously we must be doing something right. And yeah, two of our biggest partners, you may have already spoken to somebody from LifeSearch if you've looked through Compare the Market and Money Supermarket. I just wanted to mention, if that's the case and you do want a quote from myself or us and you already are an existing client, then that's absolutely fine. You can just contact your existing advisor, or if your advisor is no longer with us, you'll just be allocated to myself if you do want a quote. The difference between us and other brokers that you may have spoken to, we don't just work with 1, 2, or 3 providers. We are a multi-panel life insurance income protection specialist, as well as other covers. It is literally whichever company is best for you based on your health, your lifestyle, and ultimately your needs. So it's not just a case of me being a Aviva salesman or a Aviva rep or an AIG. We are impartial, and we will advise who is best for you. And you might be thinking, well, that should be how it works anyway, but trust me, it's not. A lot of other places just have like a smaller panel. Mortgage brokers especially will like to work with 1 or 2 companies, but because all we do here is protection insurance, we do have more time to like choose the right provider for you. These are the providers. This is all the providers that you can see here. This is just a snapshot of the ones that you may know. You may be looking at them and thinking, oh, I've actually got a policy with Aviva, or I've got a policy with Aegon or LV, which is absolutely fine. The rates from us are different. If you were to submit a new application with us, if you do want a quote, they'll just treat you as a brand new customer. So don't feel that if you've already got a policy, that's going to exclude you from a further quotation, because it's absolutely not. And these are just a couple of our partners. the main ones: Money Supermarket, Compare the Market, Halifax, Bank of Scotland, Scottish Widows. So, you know, it is just a really big brand that we work under now, Life Search. And like I said, Serene is also a big one for us as well, which, you know, Vivek and I have been working on quite heavily. So yeah, just to kind of move into kind of what is family protection insurance, we're not going to kind of reinvent the wheel here. We all really, if you have a policy, we all know why we need insurance to cover us against the unexpected. I mean, you can apply that to anything. You can apply that to car insurance, home insurance, pet insurance. But I've been in the job a long time, and I still, when I write these presentations and I kind of discuss with clients, it really is a profound insurance because of what it actually does. I mean, if you're looking at these kind of statements here, it helps take away the financial stress for you and your family in events like cancer, heart attacks, you know, not being able to work through ill health, awaiting operations, you know, having accidents. It is a completely unique insurance altogether. You know, it's not just like putting your postcode in or your car registration and getting a quote. It's a lot more emotive. And obviously that kind of is always worth remembering when you're speaking to an advisor, because it's not just about, or it's not always about price. And yeah, it's a really profound insurance in my opinion. But yeah, the cover we'll discuss today, the three main types. That's the aim of today's presentation, is to go through the three main types of cover that are going to be applicable to you in your everyday life as doctors, you know, having families, maybe growing your family, looking at increasing your financial liability. If you're looking to buy 1 or 2, 3 houses, you know, what insurance do you need to protect that, in terms of, you know, being liable if you pass away and the main income earner goes. You know, these are all things that might happen to you over the next 20, 30 years of your life while you're still working. One thing worth mentioning about this type of insurance, I know Vivek will speak to you about other insurances over the next couple of sessions that he's got planned, but this insurance really is unique to you as a family, as an individual. There is not one size fits all. You know, you do not put your date of birth in and get a quote given to you. That is why I'm in a job, because if it was that simple, then people would just buy it online. But even though the comparison sites have been around a long time, people still need to speak to advisors, because literally everyone's situation is completely different and everyone has different concerns. So the classic protection plan, I suppose this would start most policies or most packages, especially if you've already got cover or a mortgage or you've got children. This is probably the one that you've got. The main questions that I get asked most of the time are those three. They're the three first questions that clients have to us. How much should I have? How many years should I take it for? What affects the cost of my policy? Okay. And you can apply that to literally other plans that we'll discuss later in the presentation. But I suspect, back to the last point I made about being unique, there are things we can help and guide, but it's for you to tell us what your concerns are. It's not for me. I see this a lot with people that have had quotes through mortgage brokers and maybe through your bank or maybe through, you know, other avenues, where it's a case of, well, this is what you should have, this is what you need, or it's not always as binary as that. It's about having a conversation and kind of you sharing your own concerns, because the amount of time people just protect the mortgage, okay, because that is normally the biggest liability that we have as people, is the mortgage. But actually, a lot of the time it's protecting the children and making sure that if I pass away, my wife or my husband has some money coming in to help with the council tax or the gas and electric, which is going up. And it's not just the mortgage, but so many people who give advice on life insurance just literally focus on the mortgage. And I think from there, you know, like I said, we're not going to go through all the various different things you can do, but the main three questions are level, decreasing, or increasing. That they're the main things that people should I take out a level cover? Should I take out a decreasing type of life cover? Or I've got decreasing cover, but actually, you know, these are the main conversations you should be having. And if you haven't had that conversation when you arranged your policy, that would be something I would be very wary of, because having the right advice, you have to have these discussions to make sure that you've got the right plan. And sometimes, as morbid as it may sound, it's often too late when people realize they've got the wrong plan, because the advisor's not discussed it properly, and someone's wife phones up and says, look, I've not got enough cover for the mortgage. My husband's died and there hasn't been enough paid out because I've remortgaged. I didn't contact my advisor or something like that. So it is worth keeping a track on your existing cover. And if this is all new to you and maybe you own a life insurance plan and people have not had this conversation, then reach out to us and we can definitely help you out. The other type of cover, this is probably the one that catches most people out, I would say. I've been in the job 10 years, like I said, and this is the one that is still so subjective. It's the most subjective one, critical illness cover. It's always interesting communicating with critical illness and doctors because there is insight there that you have from your own profession, which kind of crosses over to how critical illness cover is, because it's not just a case of being ill and getting paid out. That's what people think. So many people think, oh, don't worry, if I become ill, I've got critical illness cover, it's going to pay out. But it's not always that simple, because there are certain conditions which are and aren't covered under critical illness protection plans. The three main conditions are always the same: cancers, heart attacks, and strokes. Okay, and that will provide a lump sum if you are diagnosed with one of the listed conditions. That's a key word, listed conditions. Okay, so if you're thinking that your critical illness plan is going to protect you if you're not able to do your job through ill health, and that's not the case. Okay, that's a completely different kettle of fish altogether. Okay, whereas critical illness is for serious diagnosis of things like cancers, heart attacks, strokes. They're the three main ones, like I said. But depending on which company you go with, depends on how many conditions you're covered for. This is vital in the service that we can provide to you moving forward, because your existing cover might be better than what you can buy today. This is, again, critical information, really. If you've got existing cover for 25 years ago, maybe 20 years ago, then it can potentially be worth keeping your existing cover. But similarly, it might be better to change, because the way that critical illness cover works these days is completely different to what it was maybe 15, 20 years ago. So if you have got existing cover, don't be scared of getting a quote from us. We are fair, we are impartial. We have to do a comparison. We have to do a comparison of your existing plan to see if it is better than any new policy we can give you. And if that is the case, we have to have that discussion with you. So please don't feel that having existing critical illness means that you can't get a new quote from us, because we will absolutely be fair. One of the reasons why it's good to change the new policies, the policy which have been designed in the last couple of years, have additional features to the old ones, like children's critical illness cover. That's just one example, but that really is. Children's critical illness cover is not just a novelty plan or feature of the plan, it's the 5th most common claim. Okay, so it works by basically providing a percentage of your cover to each of your children. Some companies are better than others for children's critical illness cover. But like I said, it's a relatively new feature of cover. So yeah, it's just always worth checking that your current plan has got critical illness for the kids, because it's not a novelty. It does pay out. It is the most commonly claimed on, one of the most commonly used conditions. So this is cool. So this is something that we subscribe to ourselves, Critical Illness Expert. So every provider has a different amount of conditions on the plan. Okay, so the average company covers around 40 to 50 illnesses, and people say, well, can you go through all 50 of them? I said it's impossible to do that, but they will all be able to be found in your key facts document. But it's not so much the list of conditions where a critical illness provider may offer a good plan, it's the definitions and the wording of what that particular provider classify as cancer. Okay, so I hear a lot of advisors saying this company is best because they cover 100 illnesses. Okay, it's not always the best way to advise, because it's the wording of what they classify as a cancer where a plan becomes a good plan from a not very good plan. So there are providers that we like to use who have the best cancer definitions, or if you're speaking to a 55-year-old male, there are certain providers who may be better at protecting against having a heart attack. So, how many, troponin is present, for example. Obviously not going to speak about, that's my biology, to the max, knowledge to the max, but you will understand from that example that the type of criteria that you have to meet. And critical illness expert is a software that we use where we literally put your gender, date of birth, smoking status, how long you are looking for a policy over, and the database will literally search which insurer is going to give you the highest chance of a successful claim based on the previous claims history of that insurer. So it looks at, okay, well, AIG have paid out the most heart attack claims because this is how they're wording, and it's a really unique way of quoting critical illness. It doesn't take any consideration of price. It will just show us in a ranking form of who is best for you, and it's a really receptive way of getting cover. I think people really like that, and I can actually send the PDF, and I can actually send the report and the results onto you, and people are blown away by, they can't believe that there are certain illnesses which aren't covered by insurer A but are covered by insurer B. So yeah, critical illness cover is a really interesting topic. This income protection. So income protection was initially what we were going to just focus on for Serene. That was what Vivek won't mind me sharing this. He came through to me many years ago as a client of us. And Vivek was worried about the impact of long-term ill health, as most people, will naturally be. If you work in the industry as well, you understand the impact of being off work long-term and what happens if the sick pay runs out. That's the key. People say, I've got sick pay, I don't need income protection. But if you're off work and you have a life-changing stroke, the 6 months full pay, 6 months half will soon run out. That time will come at you quick. And that's what the income protection does. A tax-free monthly income if you aren't able to work through ill health, accident, or sickness. Okay, so often people ask me, well, which one should I take, Joe? Like, I don't know which one to do, income protection, critical illness. Again, advice is subjective. We're not allowed to decide for you. All we can say is income protection is a monthly amount which is designed to pay things like your bills, your mortgage payment, the most important things to us, food in the cupboards, all the basic stuff. And it will pay out on any cause of ill health. Okay, so if you are thinking to yourself, you've got people have 100 grand of critical illness cover, and they'll be right happy with that. They'll think that's great, I'm fully protected, but they'll have no sick pay and no savings. Okay, so let's say that person is awaiting a hernia and they can't work, or they're awaiting to have back surgery, or they're off work with mental health conditions and they can't, they aren't in a fit state to do their job. That 100 grand critical illness policy is not going to do anything for you. I can guarantee you it won't. Okay, so yeah, with the income protection, if you're thinking to yourself, listening to what I'm saying now, oh yeah, that is actually my concern. The amount of people have critical illness but actually want income protection is phenomenal. You would be surprised. You would literally, even now, you'd be surprised at that. Like I said, going back to the first point about people saying, oh, I've got cover through work. If you work for the NHS, okay, normally you get 6 months full pay, 6 months half, depending on service. But most people, I would say, get that if you've worked there for a couple of years. But I think I seen a stat a while back that says 20% of people who are off work longer than a year never go back. So if you've got 6 months full pay, 6 months half, and you're 50-year-old or 45-year-old, what are you going to do for the next 19 years, until you're 68? It's a big gap of time where you might not be fit enough to work. And that's what the income protection can do. It's just incapacity. This is what people can't believe how good it is, because they think it sounds too good to be true. It is just your incapacitation from not being able to do a job as a doctor, surgeon, a plumber, a hairdresser, whatever it is you do. If you can't do your own job, so this is a promise that we have to all our clients, they won't make you go do a lesser job. Or if you're a surgeon, they might make you go and be a teacher, or maybe you could be a research doctor, something that's not as hands-on as surgery. No, the way you get income protection through us is if you can't do your current job at point of claim, then you can make a claim. It's that simple. It really is. You can see that in the key facts. And that's why it's the most claimed on policy. It's a policy which I would say not enough people have, but yet it's the most claimed on plan. So it's an amazing statistic, really, that, because everyone should have income protection, and that's just me being. I love income protection. You can tell just because I see how it helps people, and how it's helped previous clients of mine, and also family and friends who I know have claimed for things like injuries sustained playing rugby and things like that. But yeah, you can claim on the plan. It depends on, again, without getting too specific. You can claim on the plan for as long as you need to on certain policies. If you could never work again, you would pay out until you were 68 or until you're retired. But there are shorter term options depending on your budget. It's the only policy you can claim on more than once. So if you do have a recurrent cancer, or if you do have something that you do go back to work, but then it comes up again, another flare up, then it's the only policy that you can claim on more than once, which one person once asked me many years ago, can you claim twice on life insurance? And I said, not if you come back as a ghost. So with life insurance, it is just, as we all know, just one claim only. But with the income protection, you might need it more than once, which I think is an understated plan of it. You don't hear people speaking about it enough. And this is a cool thing, which I think will be super applicable for you. And I know Vivek will be going mad at me for not mentioning this already, but if you are employed by the NHS as a doctor, surgeon or nurse or midwife, just let me know. Well, I would ask you on the quotation anyway, because there are some policies, some providers who have special arrangements, special benefits and discounts and rewards and premiums for if you're NHS. So just let me know, because that will be factored into the recommendation. So obviously, like, quick overview. I mean, I know I'm not sure I'm going on for time, but obviously, Vivek, let me know if you want me to stop. But there are a couple more slides that I've put in. These nowadays, it's more than just an insurance policy. It really is. Some of the benefits that you can get on this plan are just phenomenal. Depending on which insurer you go with, depends on what providers and what services you get. Some insurers, as do some clients, still like to just do your bog standard life insurance plans, and that's absolutely fine. They've got their place in the market. You'll always speak to people who are price conscious potentially, who just want the cheapest possible way of buying life cover, and that is 100% fine. We can advise on that. But most of the time, for a couple of £1 more per month, sometimes not even that, there are so many features you can unlock with providers who go above and beyond. For example, there are some companies now that offer features like personal and family support. So if you do have to make a claim, they won't just do the underwriting for you. They'll actually offer you family counselling sessions, or they'll put you in touch with, like a company called AIG do something called Smart Health, and under Smart Health you have a company called Best Doctors. Some of you might even work for Best Doctors. It's a second opinion service. So if you're not quite happy with what your bowel nurse has said to you about you might want to get another nurse or another doctor to kind of give you some second opinion. You can actually phone up 24/7 and they will get you they will put the details through them, and it's just little things like that. And sometimes when I first started doing this job, I thought, people won't ever use that. Why would people do that on a life insurance plan? But the testimonials are just incredible, and you can actually see on the websites that some of the stories. But yeah, the Smart Health one, which is through AIG, if you were to go with AIG, other companies offer similar services, but the Smart Health one is the award-winning one. It's got access to like online GP services, so there are stories where they've not been able to get a GP appointment in place in any good time. Within 30 minutes, they phoned up Smart Health and they've done a virtual consultation one. Again, some of you have spoken to doctors before who have been members of that and actually worked on the other side. But like I said, it's just worth kind of mentioning that it's not just a life plan these days. There are other features, and also I've got an iWatch on, which I got through a company as part of a discount and reward service that one of the companies offer. So if you are into active lifestyles, let me know and we can show you certain providers which might be good for you. The policy itself, this is something that I don't know if that Vivek has got. Don't worry, I've confirmed that he's happy to share that information with you. But it's a relatively new policy. It's been around probably 4 or 5 years now, but still relatively new. And it's something that sparks major interest because of the nature of the policy, and it's a unique plan that's being brought to market by a company called Aviva, and it's called Global Treatment Cover. Okay, so I've listed the 1, 2, 3, 4, 5, 6, so basically 6 serious illnesses which, if you're diagnosed with, okay, you can actually, Aviva will actually pay for you to have treatment either in the UK or further afield with the leading specialist in that particular field. So if it was, bowel cancer, Aviva will arrange for you to go and see the leading specialist. Let's say that's in America or Germany or Japan or South America, and they will pay for you and your wife or your husband to travel there, stay there, and they will pay the treatment. The cost of that, it's up to £1 million per year. So it's an incredible plan. I've not put this on there, but I don't mind sharing with you. You would probably look at that and think that's going to cost me an absolute fortune. That will cost you £3 extra per month on your life insurance premium. It's just incredible. And the claims, as it came out 5 years ago, the claims are coming through thick and fast. That also covers your kids as well. So your children are covered as well for that. So if they have, I see it all the time on Facebook. It breaks my heart where you see like these stories of people having to raise money for the child to go to America to get treatment that's not available on the NHS. And that is the thinking behind that plan. So you can literally add that onto any life insurance critical income protection package. I have set it up for certain clients where they've just taken a life insurance policy out just for that. So if anything, that is, it's an absolute worth godsend in my opinion, and the claims also speak for itself. So yeah, final thing. So life search, it's not just quote and apply, like I keep saying, it's more than just getting you a policy. It's the aftercare and what we can do for you after you've set your policy up. So we've got a claims team. They'll help you and guide you, or unfortunately, if you're not here anymore, that is the key part. It's okay if you're happy to speak to us, but would you be happy for your parents, or would you be happy for your wife or your son or your daughter to speak to us? We will obviously speak to them and help them claim and make sure that we're chasing up the claims. Majority of claims now, about 99%, okay, on life insurance. The 1% that don't pay out these days are because people have not disclosed things like non-smoker, and maybe they've died of a heart attack and they didn't tell the insurer they had diabetes, like really extreme examples. So as long as you're honest with the application, then you don't have to worry about anything. It's a myth that insurers don't want to pay out. When I hear that, it's just a myth. That's a media myth from 15, 20 years ago, before regulatory boards came into place. The FCA are the strictest regulator for any type of regulatory board in the UK. They obviously regulate your bank, your mortgage, and we operate under that. So you don't have to worry about Aviva not paying your claim out, but you do need to worry about being honest with the application. And obviously that's one of the reasons why our clients have the highest kind of best experiences at claim stage, because we do the application for you. So if you're umming and ahhing, I don't know if I need to disclose that. A lot of brokers that come to your front room or come to your house or do it themselves on a mobile phone, they'll say, oh, don't disclose that. Whereas for us, I mean, if we got recorded saying that to you, we won't be able to sleep at night, to be fair. But there are, as some of you may know, if you've had it face-to-face sales, that can be the case. But yeah, if you do go with a company that doesn't offer these benefits, okay, like Smart Health or Global Treatment or things like that, as a LifeSearch customer, you get something called LifeSearch Care, which is similar to Smart Health in that we provide access to nurses, specialist nurses. So if you were making a critical illness claim, and you were struggling to get up to the hospital, and you maybe you're an older person, you can actually phone up and they'll connect you to, they'll give you a specialist nurse that you can actually speak to. And it can be difficult. I know from my own experience of dealing with treatment at a hospital with an issue for a family member, that it can be difficult to get that advice sometimes. You just want to ask maybe a question or something like that. So yeah, it's a really proud service that we're going, that we've offered. We introduced that about 4 years ago, but it's something that, again, the claims come through and people use it. So final thing, the most important part of today's call is obviously we're all here mutually as kind of members of, or in partnership with Serene Doctors. It's not something I'm proud of being a member of. I've done quite a lot of work with Vivek and Anoop over the last couple of years now, and it's great watching the brand grow. As part of a member of Serene Doctors, I've got agreement to be able to provide exclusive rates and preferential rates, so you will get cheap premiums than doing it elsewhere. We don't like to make it about price, but we do as well, because especially in this day and age with what we're going through now, there's nothing worse than having to overpay for something, okay? And you will get the right provider. So naturally, we don't really need to put discounts on premiums, because your health and lifestyle have such a big impact on it from one company to the next, that usually picking the right company is the best way of buying it. So many people that I speak to are with the wrong company because of the diabetes. So people think if you've got diabetes, every company will increase the price by the same amount. That's absolutely false, okay? Some companies don't have to increase the price anymore due to diabetes. If you've got a good reading, you're up to date with your medication, you're not in and out of GP getting you can get a really good price. But some insurers will still put 100%, 150% uplift on the price. So as I said, we don't like to make it about discounts. I don't like the work really, but we have got an agreement in place with Serene Doctors where you will get exclusive rates. Plus, I've agreed with Vivek that we will make a cashback premium refund to you, the policyholder, of 1 month's premium refund. So you will whatever the premium is, whether it's £10 a month or £200 a month, that will be refunded to you as a reward for doing it through Serene. Plus, we will donate the equivalent amount to Serene Doctors organisation. Okay, that's something we believe in as a brand, and you'll also get access to me as well, which hopefully you like the sound of. But I will be your advisor at this. They will all come through me. So yeah, full list of services. You're going to get this emailed onto you, so don't worry. But I just want to put that in there. This is kind of everything I do. I don't just do personal cover. If you've got limited companies and you're self-employed, you should be speaking to me ASAP, because self-employed people are chronically undercovered. Okay, it's just you don't realize how exposed you are if you are. If there's an element of self-employed to your job, then just message me as quick as you can. I can get some information and can explain to you what you actually are and are protected for, and go from there. And if you've got any, we also do inheritance and estate life insurance. So if you've got a high net worth or you're worried about your kids having to pay an inheritance tax bill, there are additional services that I can offer as well. So again, we will speak on the phone, and some of you might need all of this, some won't maybe just need a little bit of income protection. It's absolutely fine. It's all unique and advice. And so yeah, how do I request a quote? More importantly, just contact Vivek's going to send an email around, to my knowledge, with my details. Best is just to email me. This email, joelawrence@lifesearch.co.uk. Just drop me an email. This will then come through to me, and I will then give you an email back, or I will arrange a time that you're free. I work 9 in the morning until 9 at night, apart from Wednesday. So you can literally take it on weekends as well. I don't really do much health and life insurance. People think it's quite sad, but I'm quite passionate about it. But so I can call you every day. Just let me know. I know you're all busy people. If you're doctors, I know it's difficult to get Vivek half of the time, but ultimately we are patient. And yeah, just let me know when you're free, and and all the quotes are free. You don't have to pay for anything. It's all part of the service. All right. So yeah, appreciate your time. And I think Vivek's going to come in now because I see his face flash up. So I'll pass you back over to Vivek. Thank you. You're muted.
Yes, thanks, Joe, for the wonderful presentation. And I learned a few more things. And while we are having a commercial break for the people who are live right now, and the people who are watching the recording, it will continue straight away because the commercial break will be not recorded now. And Joe, you can go through the questions and while we go for the break, but people who are watching the recording, continue watching. It comes back in a moment.
So I'm looking at these questions. Thank you, first of all, to the people that submitted a question through. I'll just go through them from the top down, no problem at all. So the first question is, what would be your advice on the upper limit of the age when deciding life and critical illness cover? So like I said in the presentation, this is, there are formulas. It is subjective to your own concerns. Some people still, and this is fine, will just run it until the mortgage finishes. That's absolutely fine. But I think now we are more conscious of, like, for example, you might pay your mortgage off when you're 50 years old, okay? So your policy might finish at 50, but your son or your daughter or daughters might be living at home until you're 63 because of how life is now. You know, people don't just get to 18 and move out. It just doesn't happen anymore. So I'd say the most common term now is retirement age, or until maybe kids are independent at 25. Maybe the kids are living at home, but they're actually working full time. So that vulnerability to them, if you die after that point, it's still sad. It's not going to take away the hurt, but the financial impact is not as great. So I suppose it's about running it until the financial impact of passing away or becoming ill is no longer there. So people have investments coming in at 60-year-old, people have pensions at 60-year-old, some people don't have any pensions at all. So, you know, it depends on how long you're planning on working to. But the key point is this, and this is what people will always tell you. Let's say your policy finishes at 52. So you've got a policy now and you're thinking, I'm absolutely fine. I'm happy with the premium. The payout is enough. So I don't need to speak to this guy. It's fine. But the issue is this: when that policy finishes, there's no free pen. Okay, there's no nothing. There's no extension. There's no renewal. When your policy finishes, that's it. You're on your. You've got no. You're back in the market again. So the point I suppose I'm trying to make here is, you don't really want to be 60-year-old, 55-year-old, 58-year-old, and your policy running out then. If you need it to 68, for example, you better to be proactive with it. So I don't know what the average age of people on this call, I'm assuming there'll be people from all different types of age groups, but the example is the same. Be proactive with it. Find out how long is left on your policy and ask yourself, well, do I think I'll still need cover past that age? And if you think you do, or you want to discuss that, just let me know. But the key is, if you are happy with your current plan and it's not worth changing, we don't just churn business out for the sake of it. We will say that's absolutely fine. And that's key to mentioning as well. But yeah, hopefully that answers your question. And that applies to critical, and that applies to income protection is a little bit easier. Income protection normally runs to retirement term, or they call it to retirement, so 68 basically. Obviously, I know that's getting higher, but most people, I suppose, from the generation on this call will probably be looking at retiring 68 to 70. So that's kind of when you'd run a policy for. So hopefully that's for here answers the question. We've got one. I think this is from Vivek, to be fair. If I can't practice, this is a really good question, actually. If I can't practice as a doctor due to sickness, but can join a tyre selling business for my brother and even earn more than NHS pay from there, then will I still get money from the income protection? So there's probably 3 or 4 answers here. So first of all, it's a percentage of your income. Okay, so if you earn 100 grand a year, you can't insure yourself for 200 grand a year. The reason being, 2 reasons, tax reasons, but also the main one is it's not supposed to be an incentive to be off. Okay, I'm not saying you would be that, but there are some people who would soon realize that you might earn 50 grand a year, and if you signed off work, you're going to get 80. So that's why they do that 60. Normally it's 65% maximum replacement of your gross total earnings. Okay, if you need that much, most people just cover the bills or their share of the bills. But if you want the maximum you can replace, that is the formula, 60 to 65%, depending on which insurer you go with. Okay, so yeah, obviously, if that case there, in the example of tyre selling business, you wouldn't make a claim, because if you can't be a doctor, you wouldn't be able to fit a tyre to a car. Okay, really. Obviously, if you're mentally struggling and you signed off with depression, you can't handle, or you can't deal with the day-to-day duties of practicing medicine, but you could fit a tire to a car, for example, then you wouldn't need income protection, because your income protection potentially would, well, if you can pay out the full amount and you've got your bills, then obviously, yeah, you're absolutely fine. But if there's a pay gap, okay, so if there is a pay gap in that situation, okay, so this is a better example, I would say. If there is a gap in pay because you're not well enough to be a doctor, but you can still go and work part-time somewhere because, for your own sanity, or because you want to, but it has cost you some of your income, the insurers will use something called proportionate claim or rehabilitation cover, where they will actually top up. So they'll say, okay, you're not earning as much fitting tires for your brother. Okay, you're not earning as much, but we will pay a proportion of your claim out, so you're still getting your £2,500 a month payout, or your £3,000, however much your monthly benefit was. So they'll top up your claim. Someone's Ash, you've got your hand up. Fire away.
So on the same one, Joe, I was going to ask, say if I'm not actively working there, but I have 50% stake in my brother's tire selling business, and that 50% happens to give me 50,000 profit to the company of tire selling.
Yeah.
I don't draw that money out. That sits happily in that company. So it's a return on my investment, which I'm not taking out what happens in that case? Do I get any money back? I'm not working, I'm not able to work, but my investment is doing well in my brother's tire selling business.
Yeah, when you look at the key feature of these documents, they classify, they are strict with their underwriting. Okay, so if, for example, the amount you are receiving from your brother's business, okay, is not more than 65% of your income, so they again link it back to proportion. The claims team would work with you and us, and they would look at how much you were earning. So let's say you insured yourself for, just to keep it simple, £1,000 a month. That's how much Aviva covered you for. So if you're off work for, let's say, 30 days or however long your deferment period is, normally for doctors it's 6 months or 12 months, because they've got 12 months sick pay already, and then you will start to receive £1,000 a month from them. Okay. However, Aviva will say, okay, Ash, so have you got any income elsewhere? Are you receiving any earnings elsewhere, which dividend is included? You have to pull dividend out annually, otherwise it's a nightmare. Okay, that's like, you might not be taking a salary from the business, but yeah, you'll be taking the dividend out. Although most people pay themselves a salary in that situation, because you can pay yourself 12 grand a year. So there is, again, it's not, I understand your example, it's just unlikely you would probably be in that position. But ultimately, if Aviva said, or LV said to you, you know what, you are actually pulling in this from you're earning enough, and we can't insure you for £1,000 because it's 65% more than your income, then they wouldn't pay the claim out. But if they said, actually, you know what, your earnings from your brother's dividend, or the company you share your brother with, plus the £1,000 a month is not more than 65% of your earnings, then yeah, they'd still pay the claim out. So they look at the earnings when you apply. Okay, when you apply for a policy, they will ask what the average earnings have been over the last 3 years. Okay, so it's all checked when you claim. So if you make you could tell me what you earn. You could say you earn 200 grand a month, 200 grand a year, or whatever, and then you actually earn 80. And if you make a claim, they won't pay out. They do check it, so it's got to be right. You've got to be honest as well, because it's all checked at point of claim. So we are super strict. We don't want to overcover you, because you don't get anything back if you've overcovered yourself. They'll just say, no, this is a maximum we'll pay out for your current situation. And they do get your bank statements. They do get it's like underwriting a mortgage at claim stage, which is why our claims team is so important. But just going back to that example, the thing is this is unlike I know the other guy, the man that was speaking there, I've forgotten his name. I can't remember the guy was called over in India. He was saying about investments and this and that, which is completely fine. It's great. I've got investments and I've invested elsewhere. But what we do here in the UK it's completely unique to protection. So in that situation there, what I'd be saying to a client would be, but you've got money coming in. You are not on the, you're not able to pay your mortgage. Obviously, you could say, well, 50% of my brother's dividends not enough to pay my mortgage, and refer you back to that example. So yeah, it all depends on how much you insure yourself for. Could your brother carry on giving you the dividend if you were not well? You know, you might not be able to bring as much to the table, so he might not be able to continue paying you. So there's all these things to consider. Taryn, you got your hand over that. Is that Ash? Does that make sense? Sorry, first of all, is that clear?
Yeah, that's very helpful. But what I was really getting at is, what if I don't draw the dividend? If I don't get any dividend, it's not coming into my account. The money sits within that company for, say, future investments or whatever growth of that particular company. So it's not coming to my account. In that case, and I've declared everything. Say, whatever my income from the NHS is, I'm losing out that income. So what happens in that scenario?
To my, this is the thing. If you're aspiring company directors, or you're looking to get into, being a limited company director and taking a dividend, then it's worth speaking to your accountant, because dividends need to be drawn. Okay, so you normally give yourself the dividend annually. There's no rollover with dividend, so it wouldn't just be as simple as that example, to my knowledge. Your accountant, as I said, I'm not an accountant. I do obviously business advice, but most people in that way would, I don't know how long you've been if you are speaking hypothetically, or if you are, this is what you're doing. I'm not an accountant, so I'm just letting you know based on that example there, because what you're trying to say is, well, I don't want to pull the 50 grand out of the business, that's my dividend, to pay my bills. I'll rather Aviva pay it. Okay, so obviously I appreciate what people might say, but to my knowledge, the example, you would need to speak to your accountant to see if you could do that first, and then I would need to check with Aviva. That's what I would say, because it's an unusual, it's not that request there. I've been doing job 10 years, and I've never really seen that happen, because people would carry on taking income before they take a dividend a lot of the time. But I appreciate, for tax reasons, if you're employed by the NHS, that's not always the case. But yeah, obviously see what your accountant says, and I can check it with Aviva for you. And I'll come back to you on that, because that is a unique question. I'll be honest, that's not something that I've been asked many times before. But I think the grey area around that question will be, is it as simple as keeping dividend in your business account, like what you're thinking? Do you know what I'm saying? So if you can find out what the accountant would say, I can double check that with. That's more of a business advice kind of area, as opposed to income protection one. And then I would come back to you. We speak to Aviva. Like, I won't tell them who you are. I'll just say, I got a male who's whatever, 22-year-old, and I'll say, I had to be careful what I said then, or whatever, and I'll say, look, this is a situation, and they just give me like a hypothetical. They don't. I don't have to tell them who you are, for example. That's called pre-sailing or pre-inquiring. So yeah, just let me know. Just email me, and I'll find out on that. Is that your situation then, Ash? Is that what you've got going on at the minute? Is that why, or is that just a hypothetical question?
It's a hypothetical question,
Right, yeah.
based on the tire selling business which came up.
Yeah.
My view would be that any doctor who's running a limited company would not really be drawing out any dividends, because if they draw out dividends, they pay close to 50% tax, so 38% tax on the dividends, except for the £2,000 per year tax-free limit of dividend. So if I was to draw out from my company, then I get 2,000 tax-free, which is the current tax rules. But beyond that, every dividend that I draw out, because I'm a full-time NHS doctor, I pay, that gets added onto my NHS income. So I end up paying 38% dividend tax. So none of us really would draw out dividends if we are in employment. So the dividends or the income or the profits from the company usually end up sitting within the company. So what happens to that? Could Aviva turn around and say, you have enough profits accumulated within the company, so we are not going to pay you out?
The thing is, though, because you can take, I think it's something like 37,500 dividends out at 7%. So it's only after you've taken that much out that you start getting the big corporation tax. Again, accountants will confirm this, but what Aviva will say is, well, you're receiving this money. This is your money. There's no There's no, it's just protecting yourself against. I won't say. Go on. Sorry, Shiv, go on.
Can I just come in? I think we're just going around in circles here. Can I just ask one thing on the same point as Ash has raised?
Yeah.
About this, Joe, what you said was when you were talking about income protection earlier.
Yep.
Was that it's your income, so it's about that job. So if you were getting 5,000 from that income or whatever,
yep,
was that job? It's not any other job or a lesser job. So basically, if it's about just that job, then you should get all the money from the job. Avia has nothing to do with, because to say is Ash that in from that business from his brother, even at the time when he enrolled with Aviva. So, I mean, are you saying that he should enroll the tire selling business as well, saying, oh, I've got the income from there, and then they're covering, because it's all about, I'm sort of leading a lifestyle and I want the same lifestyle should I not able to work. So basically, I mean, because he's not hiding anything, he had that thing already. He's lost this additional income or not additional income from the NHS. So then he should be getting the full amount. So I don't understand why Aviva should turn around and say, oh, you've got income coming in from there, but that means leading a lesser lifestyle. It doesn't make sense to me.
Well, it depends what your total earnings are. It's, the job.
Yeah, so the total earnings could be 100,000 from the NHS and 50,000 from that business, which is not drawing out. So actually, his total earnings is 150,000, I believe. But actually, I mean, yeah. So why should?
So he could replace. So in that scenario there, so they'll assess the claim on the job. Okay, so you could have, for example, we get a lot of doctors, nurses, any type. They'll have an element of employed work. They'll work privately. They might have a practice, and they'll have a total yearly earnings of like 150 grand. Okay, that'll be their total earnings that they can insure against. Doesn't matter that 60 grand of it's NHS, 40 grand of it's tire business. It's assessed on the riskiest element of your job at claim stage. That's what the PowerPoint was in reference to. It doesn't make a difference what you do, who you're employed by. It's just if you can't be a surgeon, okay? But when I'm quoting you, if you said to me, Joe, look, I've got heavy reliance on this dividend elsewhere, and I've got heavy reliance on this, and I need as much cover as I possibly can, I would put your total yearly earnings in, which would get checked with Aviva at claim stage if it's a high payout, if it's a high plan, like I'm looking at 150 grand a year, depending on which insurer. But if that were your earnings, you could actually insure around 90 grand, 80, 90 grand. Again, I'm off the cuff there because I would need to speak, like some insurers do 50% over certain thresholds, but we would obviously work it out for you on the call. But just for argument's sake, let's say 90 grand a year, okay, divided by 12 months. So that would give you a monthly benefit of £7,500, okay? So that's your total year, that's what, and that's tax-free as well. So obviously you would calculate that in your earnings, but it's just a hypothetical example with the dividend, because I've got my own company. I'm a company director myself, and it wouldn't. If anyone's a limited company director on here, you understand it. It's not just as simple as keeping the dividend in. It'll cause you big tax problems, and your accountant will tell you the same. So really, if you have been in a limited company for a couple of years, you'll know that that's not what would happen. You would pull it out. So as I said, if you choose to keep it in and that's what you've got, if people might be thinking I keep mine in, that's absolutely fine. Everyone's situation is unique. Let me know your situation and I will find out from the horse's mouth how much you can insure and what they would assess. Everyone is different, and that's all I can say on that example, really.
No, can I just ask what you said? So with just sort of are you saying if your gross income is 150,000, then you get 90,000 as tax free?
Net, yeah. So income protection, personal is net, yeah. So that's why that's where the 65-50% comes from, because obviously the 40.
So you're saying if it's 150,000 gross income, not so that's before tax.
Before tax,
so
yeah.
Essentially, then it comes down to the same, because after tax, maybe you'll receive something similar, maybe a bit less, bit more.
Yeah.
But the net income is tax free. So what 90,000 is tax free, basically net you get in hand.
So yeah, so I mean the better example is looking at the easier example, just to get your head around it, is to let's say 40 grand. So let's say you earn 40,000 a year, okay? Because I know for a fact you can replace 65% of that. So 0.65% on my calculator. So if you earn 40 grand a year, as a GP, and that's all you do, or as a doctor or as a nurse, and you wanted to cover the maximum you could get, okay, then you could ensure that that would pay out 26 grand a year, which is £2,166 tax-free, and that would be paid into your account past your deferment period, whichever that's set at, and you would claim that until you are well enough to either return to work or until your claim is finished. So if you have a long-term claim on it, it would just pay out that amount till you were 68. If it's a disability, total permanent disabled, and there's never a chance you're going to go back to work, you know, like if you had, you know, if you were you know, car accident and brainstem dead, for example, they might settle the claim as a big lump sum. I've seen that happen before, fortunately. But yeah, it's the payout is tax-free. If you've got a limited company, there are policies you can have through the business, which I won't go into that now. That is unique niche advice. But if you have got a limited company, then we would have a chat for a bit more. It's a bit more of a unique chat, I would say.
Thank you so much, Joe. I'll ask Tarun to
Yeah.
share his question with us.
Yeah, of course.
Thank you.
Hey, this is quite a it has spun the things which I was thinking previously. Now, when I am taking an insurance, I look at the premiums. Okay, to reduce the premiums, I declare I want, so 65% is the maximum, but I want less than that because my premium will be less. So even though my monthly expenditure would need 2,500, but I asked for £1,000 income protection, thinking in mind that I have got rental properties, they will cover up for the gap. But the discussion which you are having just now means that that was a wrong thinking, because that income would be counted of the rental properties before Aviva or any provider will think to pay out. So if I am getting from rental properties already £1,000 and my insurance income protection is of £1,000, they will say that you already get £1,000, so we will not give that £1,000 to you. Is that
so? How many properties do you have?
so? Let's say I have got 3 properties,
Yeah.
and the net income out of that after paying everything is per month £1,000, and that's why I didn't take the income protection for £2,000. I took it for 1,000.
Yeah, but your total income. So let's say you earned, let's say for example, okay, you earned, just to keep it simple, 50 grand because you're a GP, okay, and you had 3 rental properties that gave you 20 grand a year.
Yeah.
Okay, so you've got 70 grand insurable income gross. Okay, so 70 grand times, let's say it's 60%. I just want to make it completely clear here that I'm just passively saying 60. It can range from 55 to 65, and I would obviously work, like I said in the PowerPoint, unique. But just as a rule of thumb, let's just base on 60%. Is that okay? Just to keep it simple. So 60%. So that would give you an insurable income if you wanted it. If you wanted it, of 42 grand a year, which is 3,500. Okay.
Yeah.
So, but you say, actually, you know what, Aviva or LV, I don't need to insure my whole outgoings because I've got provisions myself from my rental. So I just need you to pay me £1,000.
Yeah.
But you can get 3,500. So there'd be no issues there. There'd be no issues at all with that.
Okay.
Self-preservate, having your own plan B is key. Do you know what I mean?
Okay.
I don't want to. The tire business was there was a good question about the tire. Just for those listening in, the tire question was a good example. But the 2 issues with that question was that it'd have been better to say, an example that I use to doctors is this. Let's say you can't be a surgeon, okay, but you can be a teacher. Okay, so you've got a problem with your hand, okay, or you can't be a surgeon anymore, so you have to go work at not have to, that's awful, but you go work, maybe something that doesn't earn you as much, okay, so the hand injury has impacted your illness, okay, they will cover the shortfall in that situation, okay, so when you underwriting philosophy of income protection is all about the word rehab and getting you back. That is key. When you look at these key facts documents, there's so many features on there which are designed to help you get back on your feet. Okay, and that's key. They're not trying to get out of pain. They will, even if you just started self-employed, right? Years ago, you'd have to have 3-4 years worth of income to prove. But now they better than ever. That's what, because they want to be seen to be paid out. They want to help self-employed people, and that's why claims have gone up so much in the last 10 years. But yeah, hopefully that clarifies that.
Okay, sorry, Joe, just a addition, because what happens is in the descriptions, which we are the questions, the life changes. The income protection was taken when I was 38,
Yeah.
but I am 48.
Yeah.
Now, so in that time, somebody invested in tire business or dividend business, so life has changed. In case of my wife, for example, she was a direct NHS employee. Then she started doing locum work and started to work through a limited company. And she's not taking out dividends from the limited company regularly or as a salary. She's getting just a minimum salary.
Yeah.
So does the initial income protection agreed stays the same kind of, because at point of claim, she might not have the income which she showed originally. So because of the dividend, limited company, change of the scenarios, will the company say no, you declared this income at that time, but for last 2 years you're not having this income, why should we pay you the same amount?
So again, this is subjective from one company to the next, and it is an issue because some companies will just say no, this is, they'll last for the last 3 years, total earnings, whether that's in a tax return that you've got. So if we always say to our clients, if your income changes massively, okay, you should contact your advisor and you should contact us, and we will speak to your insurer and say, look, Mrs. Smith has had a change in circumstance here. This is how much she's covered for. This is how much she needs, but this is how much she shows. A lot of it's self-employed, and then we will come back to you and say, this, your current plan, isn't enough, or there is going to be issues. We would recommend a review. But there are some insurers now, again, this is only so that will have a guarantee, a payout guarantee on the plan. It's normally around 1,500 or up to 1,500. So you'd have to have a look at your documents to see how much you're covered for, where they will guarantee £1,500 a month, no matter what the earnings are now, as long as the earnings when she started working were at that amount. But again, that is specific to some insurers, not all of them. So I would, it's important, anyone that's on this call today with existing cover, okay, it brings on to another cover in a minute, another question that someone asked about the premium if you make a claim. But it's important that your plans are up to date. That's what I said in the PowerPoint, adaptable, flexible, okay? It's important to keep, we give you a call back every 4 years to avoid issues like not being paid out enough, okay? But don't worry too much about it. I mean, I don't want to ask this question on here because there's too many people on, but the kind of question I would be asking you if it was one-to-one is I will be saying, how much cover does she currently have and how much does she earn now? And I can work it all out for you, because it might be that the reduced amount that she earns now would still cover the monthly amount that she took out when she was 38. So this is why it's free to speak to me. Just email me and I'll check it for you. All right.
Thank you, Joe.
But I just want to, there's a question that links into that actually. So does the income protection premium increase if someone gets diagnosed with any new illness after they've started the policy, or is it truly based on health at the time of taking the policy out? This is a brilliant question Ash asked this, so thanks. So this applies to life insurance and critical illness as well. Once you're accepted, it doesn't make any difference what happens to your health after that policy starts, okay? It's not like a car insurance policy where if you get 3 points, you have to ring up and add it on. Okay, that's not the case at all. If you take a 30-year policy out and you're in good health when you applied and upon acceptance, and then 5 years later you had a stroke and you claimed on the income protection policy for a year, okay? When you return to work, the premium is the same as before the stroke. You can even claim for another stroke if you had one again. So people can't believe that, because I hear advisors when I'm in the office, they don't speak about that multi-claim. It's phenomenal. But yeah, it's a better example for income protection, but it's still applicable for life insurance and critical illness. That's why it's better. to take it out when you're in good health before 50, before you get to, if you do a big birthday, if you do a 40th, 50th, 60th, have a look at your insurance. No one likes doing it, but these rates do jump up, and it's worth doing it when you're young and in good health. Or, you know, if you've got children, so we speak to a lot of people, you know, 25-year-old sons, it's a good time to do it, because it's, you know, it's, but yeah, once your policy goes in force, you're absolutely fine. That's why you don't want your policy to run too short, because people do a 15-year policy, 15 years is over like that, you know, but they get drawn into that cheaper premium because you think, oh, 15 years, that's good, I'll just do it for that, worry about it later. And then they can't believe what happens to the rates at 55 when they've got high blood pressure and diabetes. I'm not saying it costs loads more if you have those conditions, but it'll cost more than if you didn't have them. So yeah, it was a bit of a dual answer one for that one. Yeah, so will the global treatment, so the global treatment, a lot of doctors are interested in that, because I think they know the true cost of how much of treatment on the NHS, and they know the treatment available, so they are interested in taking, you know, this policy out, because it provides, you know, travel in other treatment in other countries. But they've asked, will global treatment be available even if treatment is available via the NHS, but one wants to go to another country due to family support, food habits, and more faith in offshore hospital? Well, absolutely. You can either choose, I answer this question a lot, you can, if you take global treatment out and you had cancer, you had, you know, testicular cancer or whatever cancer you had, or one of the main illnesses that are covered, you can choose to stay domestically in the UK, and they will, if there's somebody in a Liverpool hospital or a London hospital and you live in, you know, Cardiff, or you live in, you know, Scotland, they will pay for you to go down to London and receive the treatment, or if you need to keep going down. They'll also pay for the private, the medication, that they'll continue to pay for that as well. But if you actually say, no, there's somebody here in I don't know, they say Germany and America are the best. I don't know if that's true. I've just what the Aviva guy told me, but he said America is the place where people want to go. Then obviously they will look at the leading specialist, and they'll discuss that with you at claim stage. So it's up to you. If you want to stay in the UK, you can do. But if there are certain places like that you don't want to go to, maybe you don't want to go to America, you know, then you can, they'll discuss that with you, and the claims handler will do that. If you've got a life insurance policy with us or elsewhere, this is key. I don't want people going away from this thinking that sounds great, but I've got cover already. Contact us. You know, any new application submitted or any advice through me or wherever, hopefully it will be through me, but the example's true generally, nothing will affect your existing plans. Okay, so it doesn't hurt. I'm not saying every advisor will be as honest as we are, because we will say, look, no, your current policy is good, keep it, okay? Or we can just top up. You could keep your life cover, just take a bit more life cover out because you've got really good rates. And you might think that's a really honest way of doing it, and we do, that's why we do it that way. But the amount of people that churn business out, that sell life insurance and don't help you with it, is just, it's almost a pandemic in itself, really. From what I've seen over the last couple of years. So a lot of people do life insurance sales, but there's only a couple of companies that I work for that actually advise. And, you know, I'll be happy with my mum or dad to speak to somebody from Life Search, and that's kind of how I go through it, really, how I do my career. But yeah, I think that's all the questions. I don't know if anyone's got any final ones before Vivek mutes me. But hopefully, you know, that's been of use. Just if you think you might need a quote, or if you think you don't know, there's a grey area, the consultation with me is done over the phone on an evening. It'll take 5-10 minutes, and it can save you money. It can get you a better plan. It can upgrade your plan. It can give you more for your money. You know, but it won't cost you hardly any time. I appreciate you're all busy people, but ask Viveka, I can call you whenever you want. So you've got literally nothing to lose. And you know, just save my email and drop me a line. You know, I'd love to speak to you all.
Yeah, Joe, what I was asking is, like, suppose if I've got a diagnosed medical problem sometime, and the treatment is available in the UK, but it will need a kind of, suppose, say, hospitalization. Suppose it's cancer, if I say that.
Yeah.
Need chemotherapy. Well, I would not like to be treated in the UK if I've got the option to get it done free of cost in the best hospitals in India with the same
Yeah,
treatment, where I'm know the people, the language, the culture, the food is more very important, and my family is there to support me, my extended family and all, and of course my family member can join me from here as well, as you said. So I prefer that to say get the treatment in Bombay in one of the
yeah.
best hospitals I've worked in, and it's as good or even maybe better than NHS can provide me. Then will it be paid by my policy is my question, if that's my choice. Having said that, the treatment is available as good as in the UK, but the other factors are not because of the cultural or country differences, my background, which is the reason here.
Yeah, so to my knowledge, from what the Aviva say to me, I'll double check it for you. To my knowledge, it's your choice. If there's a leading specialist for oncology, or you want to go there, there will be a good doctor there'll be a specialist in Bombay that they can use. Okay, just like there would be in Spain, or if I'm not saying that. For example, is the example same to the UK? Let's say if you didn't want to leave Leeds, or if you didn't want to leave York for whatever reason, and you wanted to stay, like I'm from Huddersfield, okay, or I'm from Leeds, and I didn't want to leave Leeds because that's where my family is, then Aviva would find me a doctor in Leeds. Do you see what I'm saying? They would find me a specialist. It can be as domestic as you want, but in terms of going back to, if you're saying Bombay is where you'd want to travel to, from what I've been told by Aviva, they would arrange for you to travel there and stay there. And I will obviously double check that for you with the Aviva global treatment team and email you. But from what I've been told, then that will be absolutely fine. There'd be no issues with that at all. I do think it's a kind of, the point of it is to choose. It doesn't really make a difference as long as it's not costing more than £1 million a year to send you there. I don't think Aviva really care, to be fair, as long as it's about making you happy, really. But I will double check that with you tomorrow and drop you an email on your policy, just to let you know, because these I will if I don't know the answer 100%, I'll find it out ASAP. But from what I've been told and looking at the claims, that would be absolutely fine. Shiv, fire away.
Yeah, just a follow-on question from what Vivek has asked, because if someone gets treated in the UK, that's free to the NHS, but if Aviva is sponsoring them to go to Bombay, it will be expensive. So it's quite valid, that thing that they may, on claim stage, they may say, actually, you've got the best specialist here, so why should we send you to Bombay? I'm trying to, so
Yeah,
very valid question.
The point is, if it's a specialist, then it kind of will come down to, I understand what Vivek's saying. Obviously his family are there and he wants to be in a culture like that, or he wants to feel, maybe he feels better being day to day in Bombay. I appreciate that, but there would be a bit of a, from how I'd see it, if there was if it was a case of receiving the best treatment in the NHS, but you would maybe do that. But to be honest with you, from my knowledge of it, that wouldn't be the case anyway, because there are cancer treatments that are available in other countries. You're thinking of just India and the UK, because I understand that, because obviously your connections, but likely there'll be somewhere in between. You might go to Bombay because your family are there, but you could go to, Sweden and prolong your life. So you're going to go to, the thinking is that you would go to Sweden in that situation. I appreciate people who reply to say, no, I'd want to go to Bombay. But the way the policy is designed, the policy is worded as helping you find a leading world specialist in your cancer field. So I don't like you, everyone's different, but I'd go anywhere Aviva told me if it meant that I got 6 months on my daughter. Do you know what I mean? I wouldn't be bothered about going to somewhere where I'd want to go where I was going to get treated properly. But like I said to Vivek, I will go back to Aviva. This is a 4-year-old policy. They've had so many claims come through, so it's not like we don't know how the claims work, but it is a relatively new policy. So I can go back to Aviva and I can say, what is the actual electiveness of this kind of treatment? Like, if there is a specialist in Japan but they want to go to India, is that 100% fine? To my knowledge, it is, but I will drop you all an email to double check that. But on the flip side, Aviva will say to me, but why wouldn't they want to go to, Colombia, or why wouldn't they go to Ecuador or Mexico, something like that? So it will literally pay anywhere in the world. The thinking is you let Aviva choose, but I understand for you guys because you're doctors, so you know a lot more about it. So you might want to go and see your doctor that you know is brilliant because he's your friend, and you want to, and I need to ask that to Aviva because that's probably something Aviva have probably never had an advisor speak to 22 doctors on a Sunday morning. But my opinion is, from what the guy said and says to me, that we have a representative at Global Treatment who obviously I have access to.
Yeah, unlike other groups, we are a group of doctors who will know inside story as well of the
yeah, that's what I'm saying. It's good. Well, it's good though. It's not like some advisors might not want to speak about. This is the thing when advisors speak to doctors, they don't like to speak about the definitions or the criteria of critical or incapacitation or the intricacies of global treatment, because I understand that all you are way smarter than I am for like all this. I know you'll know more about cancer, know all these illnesses, and I'm not trying to be an expert in that. I'm just letting you know that if I don't know something for whatever reason, I'll go find it out. Okay, that's I can't say fair.
So Joe, have a quick look at any question if nothing has been unanswered, just in case, because I'm conscious of time now.
yeah, no worries. No, that's everything's been answered there. So
yeah, and any of the audience, if any of your questions has not been answered or something burning question, please feel free to open your mic and ask with video if preferred as well, of course. Otherwise, I'll give a big thanks to Joe. And people who are listening this as a recording, which we are going to put it on our channel after a bit of editing, then of course you can always message on serenedoctors@gmail.com and any queries or any help you may need, we will definitely connect you and answer to you, or you can also put it in the chat box also, but it will be preferred that if you email on serenedoctors, single word, @gmail.com. SERENEDOCTORS So is there anybody has any questions? Otherwise, you can all show your faces with smiles and give a big high five to Joe, and we call it a day.
Thank you very much for having me. I really appreciate it. And thank you for your questions. And I look forward to speaking to you all one-to-one, hopefully, if you need any advice.